In 2016, the United States began exporting oil for the first time in 40 years. 2 years later, China is one of its biggest purchasers. In the first 4 months of the year, China bought about 330,000 barrels of U.S. oil per day. That's around $1 billion worth per month and represents 20% of all U.S. exports. In June, China surpassed Canada to become the biggest buyer. Experts say U.S. output is expected to increase, and China will likely consume even more U.S. oil.
U.S. predominantly exports light sweet crude, which essentially is high quality, low sulfur crude. And that is something that is in demand in China, and their appetite is only going to grow for that, particularly in the north, into those independent refiners.
Chinese buyers have been willing to ship U.S. crude halfway around the world because it is trading at a discount relative to other global benchmarks like Brent crude.
But if China were to impose a 25% tariff on the import of U.S. oil, as it has threatened, that discount would disappear. And experts warn the market would dry up.
Demand in China would drop overnight to zero, I would expect. Nobody's going to pay an extra, whatever it is, $17, $18 a barrel for crude just because it's from the U.S.
Chinese buyers could source light crude from other countries like Nigeria or Russia. Experts are mixed on the impact tariffs might have on U.S. producers.
The world crude oil demand isn't going to change because of China's buying policy, so there will be a home for it. Effectively, if China buys from someone else, then the people that were previously buying from them will need to get it from the U.S. In other words, it balances out.
India has already become a bigger buyer of U.S. crude, but even if that market grows, as Fielden expects, other analysts say U.S. oil producers are unlikely to escape unscathed from a U.S.-China trade war.
There are many different ways that this could play out here, but really it ultimately leaves the U.S. in a fairly tight spot if we see so much of their demand, export demand, being taken off the market because of these tariffs.
Karina Huber, CGTN, New York.